All right, I think we're just about live. Welcome back, ladies and gentlemen. My name is Larry James. I own a company called Speak with Larry, no spaces. And as you know, if you've been watching these videos, is I'm creating videos for the next 90 days to help people to understand more about the stock market because I'm actually investing in stocks right now. I started actually putting a little bit more money into the stock market physically yesterday was my first day. I'm going to be doing it regularly until I get, the understanding and get the system set up the way I want it so that it can actually benefit me and my lineage, right? Create a portfolio that will allow my children, my grandchildren, my great grandchildren to benefit from the effort that I'm doing today. That's how we are supposed to do. We're supposed to leave something for the next generation. But today I'm going to talk about a variety of things, but I'm going to start off with a topic that a lot of you are really familiar with, and that's assets. Most people know what assets are, right? Now, I'm going to read you just a little definition about what an account rate of return is first. Account rate of return. The acronym is ARR, and that's an account rate return is a formula that reflects the percentage rate of return expected on an investment or asset compared to the initial investment's cost. The accounting rate of return formula divides an asset's average revenue by the company's initial investment to derive the ratio or return that one may expect over the lifetime of the asset or related project. And the ARR does not consider the time value of money or cash flows, which can be an integral part of maintaining a business. Now, what is an asset? Anybody in the room want to guess what an asset is? Okay, I'll tell you. An asset is a resource with economic value that an individual, corporation, or country owns or controls with the expectation that it will provide a future benefit. That's an asset. And the assets are reported on a company's balance sheet and are to create bought or created to increase a firm's value or benefit the firm's operation. An asset can be thought of as something that in the future can generate cash flow, reduce expenses, or improve sales, regardless of whether it's manufacturing equipment or a patent. That's what an asset is. Now, following or piggyback on asset, I want to share with you what revenue is. You've heard of that, right? You're probably pretty familiar with revenue. But let me give you the technical definition. Revenue is the income generated from normal business operations and includes discounts and deductions for returned merchandise. It is the top line or gross income figure from which costs are subtracted to determine net income. Sales revenue equals sales price times number of units sold. Sales price times number of units sold. Revenue is also known as sales on the income statement. It is vital to a startup to get positive revenue as early as possible. Now, one of the things I like to share with people as I'm creating these videos is that when you decide to take on your journey as an entrepreneur online today, following my system, you'll be doing the same thing that I'm doing. You'll create a process, right? This is a process that I do so that I do 2 videos per week, one on Tuesdays and one on Thursdays. This is per my schedule that I set up, right? So at 7 o'clock, I I have the content ready, and I have my set, so to speak, set up so that I just go and get in this location and I repeat my content, or I let you guys know what certain things are based on how I have things set up. And then at the end of the meeting, because it's on a Zoom platform for these videos, at the end of the meeting, then I simply upload it to my system, then upload it to YouTube and put it on my channel, and then open it up to the world. Put a thumbnail on there so that you know what it's about, and that's it. That's all it takes. It's not brain surgery. It's not rocket science. It's just a simple process of understanding. And then doing that, what you're doing is you're creating a product. Like at the end of this month, I got this is March the what's today's date? March the 18th. March the 18th. And I think I only have like the 19th. No. I have the 23rd and the 25th and the 30th. So that's 6 more videos I'll create, or 3 more videos I'll create over the next 5, 10 days or so. And that will end the month. And then I'll package all these and I'll create an online course on teachables.com, and I'll market this as stock market definitions, right? Or whatever title I want to give it, because you have to do that as well. You have to come up with the titles you're going to use. Just like when I create these videos, I have to come up with titles that I want to use, which require me to become creative, right? Or, become more specific in what I do. So it's actually changing who you really are at the core value, right? What you really stand for and what you do on a regular basis determines, who you really are. Now, the next thing I want to talk about is time value of money. What is time value of money, or TVM? The time value of money is the concept that money you have now is worth more than the identical sum in the future due to its potential earnings capacity. This core principle of finance holds that provided money can earn interest, any amount of money is worth more the sooner it is received. Time value of money is also sometimes referred to as present discounted money, present discounted value. Okay, so that's the time value of money. Now, all these are stock related terms. So from time to time, you're going to hear these, and depending on the atmosphere, you'll hear them more regularly, right? Next term is, what is the after hours trading? You've heard of trading, right? After hours trading is pretty much, simply defined. After hours trading starts at 4 p.m. U.S. Eastern Time after the major U.S. stock exchanges close. The after hours trading session can run as late as 8 p.m., though volume typically thins out much earlier in the session. Trading in the after hours is conducted through electronic communication networks, or ECNs. So, what's an ECN? An electronic communication network is a computerized system that automatically matches buy and sell orders for securities in the market. It connects major brokerages and individual traders so they can trade directly between themselves without going through a middleman, and make it possible for investors in different geographic locations to quickly and easily trade with each other. The U.S. Securities and Exchange Commission, or the SEC, requires ECNs to register as broker dealers. And again, the ECN is Electronic Communication Network. Now I'm going to share a term with you may not have heard before, and it's called alpha. What is alpha in terms of the stock market? Well, alpha is a term used in investing to describe an investment strategy's ability to beat the market or its edge. That's alpha. Alpha is thus also often referred to as an excessive return or abnormal rate of return, which refers to the idea that markets are efficient. And so there is no way to systematically earn returns that exceed the broad market as a whole. Alpha is often used in conjunction with beta, the Greek letter B, which measures the broad market overall volatility or risk known as systematic market risk. Alpha is used in finance as a measure of performance, indicating when a strategy, trader, or portfolio manager has managed to beat the market return over some period. Now, Alpha often considers the active return of an investment. It gauges the performance of an investment against the market index or benchmark that is considered to represent the market's movement as a whole. The excessive return of an investment relative to the return of a benchmark index is the investment's alpha. And finally, alpha may be positive or negative and is the result of active investing. Beta, on the other hand, can be earned through passive index investing. Got it? All right. Now I'm going to share with you a word that you probably know or have heard about, and that is volatility. What is volatility? You can just think of what that is in your mind, right? That doesn't settle real well, right? Volatility is actually a statistical measure of the dispersion of returns for a given security or market index. In most cases, the higher the volatility, the riskier the security. Volatility is often measured as either the standard deviation or variance between returns from that same security or index mark or market index. I'm sorry. In the securities market, volatility is often associated with big swings in either direction. For example, when the stock market rises and falls more than 1% over a sustained period of time, it's called a volatile market. And assets volatility is a key factor when pricing options contracts. And I'm going to get into options contracts and options on later videos, but you can only put so much in one video, and you really only want to put so much in each video because this can be overwhelming, and this is content. So with content, you're either reading it, you're either listening to it, or you're experiencing it, watching it, right? So if you can do all three of those, like when I create this online course via this month's videos, I'm going to have the text that I'm reading also, so that as you're watching, let's say if you purchased the course, I hadn't put a price point on what I'm going to charge for it yet, but as you purchase the course, you can actually follow what I'm saying in writing. It's in writing, and I'm right in front of you saying it, right? So you get a double whammy, but you don't really have to read it, but you can read it. That's an option for you. And you really keep these for ever. These will be yours when you purchase them. Now, the final point I want to make today is about what's called systematic risk. Final definition. Systematic risk. Systematic risk refers to the risk inherent to the entire market or market segment. Okay, systematic risk, also known as undivisible risk, volatility or market risk, affects the overall market, not just a particular stock or industry. This type of risk is both unpredictable and impossible to completely avoid. It cannot be mitigated through diversification, only through hedging or by using the correct asset allocation strategy. That's how that would work. Now, one of the things that I wanted to share with you guys this week is that as I do my research, I like to, pick up on different quotes and different, little sayings that I feel will be beneficial to, you sharing with the next person, or, the next person understanding more about, what it is that you do, or you more understanding more about what it is that you do. Now, I want to share with this, and it says many entrepreneurs don't do a good job of tracking their time or tracking their day. Are you one of those entrepreneurs, or are you one of those people? Would you say that if you're going to rate your how you handle your day, would you say you do pretty well with that, or no? I'll wait. And also, as you're thinking about that, answer this question: how do you manage your energy and time? Or how do you manage people and circumstances? Because, see, a lot of times what we do is we give a lot of energy to something that shouldn't require any of our energy. We just can't get it off of our mind. We got to keep dealing with it. No, you got to be able to disconnect from that as quickly as possible, because those are distractions. And we all get 24 hours in a day, but how you deal with that 24 hours is going to determine the outcomes that you get in your life, right? That's how it works. So let's see. The next thing I want to share with you is something I read on a quote. It says, how many excuses have you made today? Think about that. Because one of my favorite subjects is personal development. I always like to focus on personal development, because it's through personal development for me that I'm able to see clearly where I want to go. I don't get caught up in a lot of the external, a lot of the things that's going on around me. And I try to keep a goal set that I'm going toward, or actually a series of goals. And by doing that, what that allows me to do is focus on those goals and just kind of, be blind to the distractions, because they're going to be there, and they're going to be there for you as well. But you have to be able to put yourself in a position mentally, physically, and spiritually, so that you can, don't pay any attention to them and keep going. And once you get to that next goal that you're trying to get to, then you have to create other goals to surpass that. That's how you get to where you want to go, right? You make short-term goals and long-term goals, and the short-term goals need to be in line with the short-term goals. Like, you don't need the short-term goals going north and your long-term goals heading south. You don't need that. You need all these going in the same direction. If you're going to buy a car, you need a car, you buy a car. If you need to buy a house, you buy a house, you need a house. You want to start a business, you start a business. You do those things as goals, right? If you don't have them yet, anyway. And then I heard Dr. Boyce Watkins say one time, he said that something, let me see, which one did he say? He said the train to greatness and success is not public transportation. And it made so much sense to me, because, you're going to have people drop off. As you decide to go do something, people going to drop off. And that's good. That's good, because you're going to need that focus and that commitment. And you can't get that with when you're dragging other people, because remember, it's your dream. It's not someone else's dream. They don't know what you know about your dream. Got it? And finally, I want to share with you about the power of proximity, the power of being around things that you want to learn about, you want to know about. If you want to learn how to bowl, you don't hang out at the basketball court, you hang out at the bowling alley, right? You may not even have the funds or the desire to bowl right now. You might have a broken wrist, you can't bowl, but you're in that environment, right? And that proximity breeds success to a lot of people, because there's power in numbers, and your greatest strength in that world is your collaborations, your relationships. It's much more valuable than money. The money that you acquire is a tool. It's a byproduct of what you're doing. Just like when I create these videos and I package these videos into an online course or an ebook or whatever I want to do, that's the money. But the process of doing that is what makes me the expert at what I do, right? Makes people want to follow what I do so that they can emulate it and get better than I am. I like for them people to get better than me, and that happens a lot of times. I like that. That means, especially if you're a younger person, because you got the whole world right in front of you, right? But you got to take action. You got to be the one that's going to position yourself as an expert in something, whatever that is for you. You want to make certain that you're able to establish a brand, establish a name for yourself, establish who you are and what you stand for. You can't just um, go either way. You can't just be wishy-washy. You have to be one way or the other for you to have some substance to you. You can't let me get your agreement on something and then someone else comes in the room and you agree with them in converse to what we just agreed upon. That's not, you don't know what you're doing. You don't understand the process, right? And I know you want to do that, right? Listen, it's been a pleasure talking with you guys today. I'm trying to keep these videos under 20 or 30 minutes, especially when I'm by myself, because sooner or later people are going to start coming in the room and I'm going to have some back and forth for you guys to experience. It's going to be really exciting. That's why I really like putting this process together, because initially it may not seem like it's really exciting to you, for you, but it's what I love. So it's always exciting for me because I get to learn and I get to share. But for you, it may take a while, because it took a while for me. Don't let that bother. Just stick with it. Don't turn and run, because when you turn and run and do something else, you got to start over with that process. And then you repeat that process, you got to start over. So you never get to really be who you really are. You never really get to express to the world what your greatest strengths are, right? And you want to do that. You want to let the world know who you are unapologetically, right? Yeah, you want to do that. Again, my name is Larry James. My company. Oh, let me say this before I leave. If you want to be one of those people who come in and join the Zoom meeting, just like this one, and like you could be on the screen, I can be talking to you as well. If you want to be one of those people, you simply reach out to me at Larry5969@svcglobal.net. And in the subject box, type in "Let's Talk Stocks." Let's talk stocks. Then I'll know that's you. And I'll shoot you a link when it's time, like a day or so before it's time to create the meeting, have the meeting, or maybe the same day if you just catch it late. But again, it's on Tuesdays and Thursdays at 7 p.m. Central Time. So get a chance. If you get a chance, hop on in and talk with me. I love to have a conversation with you, and you can get a chance to join other people as this process progresses. Remember, it's 90 days. 90 days, you could be in a whole different place and learn a lot more about what it is you want to do. Got it? All right. My name is Larry James. My company is Speakwithlarry, no spaces. And as always, share with someone else what I've shared with you.